Okay, now the second part, we will discuss about the graphical approach and the short-term decision making. Maybe in yes, so we have enough time. We can do it. So graphical approach is not again something unique to CVP analysis. We borrow mathematics, that is the equations, because equations can be shown in graphs. Better recall what you learn in your ordinary level mathematics in drawing graphs. The same knowledge, same thing is used. Instead of x and y, we specifically, actually x and y are there, we give specific names for them. That's it. So therefore, graphical approach is a very simple overview of CVP analysis. By looking at a graph, you would be able to understand what happens. So what is the point at which company does not earn a profit, no loss? What is the region the company can increase profit? What is the region that the company has to be very careful because company is incurring a loss, because we need to get rid from that region likewise. And what is the level of production? So lots of information can be generated. So that's why we say that the graphs or pictures are important, right? Picture talks much more than a word. So therefore, graphical approach is what you call pictorial approach of learning. That's it. So visual impact is there, and we use two types of graphs. One is called break-even graph or chart. The other one is profit graph. Both graphs, if you like, you can show in one situation, but due to some other reason, when we learn, so the break-even chart or the graph is separately drawn from the profit chart, because in the profit chart we are concerned about the level of profits or level of the operations at different profits. Our concern is only the profit. In the case of a break-even chart, um, break-even chart, lots of additional information is also there, like variable cost, fixed cost, total cost, total revenue. Likewise, all these variables are shown there. Now, we'll go ahead. So as just told you, even like, no matter whether we say it as a traditional break-even chart, but really it's a break-even chart, break-even graph. In a break-even graph, we see fixed cost line, total cost line, revenue line. If you want, you can introduce the variable cost line as well, in the break-even chart. So this is a typical example. So quickly we'll interpret it. That's most important. On your y-axis, so left-hand side, vertical axis, that is the value, rupees. This value, here we use different lines. Revenue line, costs. Therefore, this value, rupee value, can be either revenue or cost. That's it. Because it's a rupee value. Whenever you refer to this line, this maroon color line, it refers to cost. Whenever you refer to blue line, it refers it represents the revenue. And this dotted line is the fixed cost. Therefore, that is cost. In this graph, the total variable cost has not been drawn. So in a new graph we will show you that one. So if you take these two lines, revenue and costs, you can see this particular point where both line cuts each other, what we call intercept. If you connect this point to the y-axis, this is the place where you see the total revenue and total cost. That means your total revenue is equivalent to total cost, means there is no profit. So that is why we say break even the point, your profit is zero. Very easy. The region below this area, is always loss. Why? Your revenue is less than total cost. Always very simple. Therefore, this area gives you profit all the time because your revenue is greater than cost. So if that is what I just explained, the same thing in the margin of safety. If your organization operates a kind of output, the x-axis is the output level of production or sales. If your company can operate or company operates within this range, actually you are in a safer zone, margin of safety, you earn profit. So if you are here, you have two decisions, either to stop that production or to find out strategies to reach somewhere here. If you are here, it is much more advisable to find strategies to reach somewhere there rather than dropping it. But if you are here, you have the option of dropping, because as long as you are in the production process, it incurs losses to you. Better not to do. Unless you can jump somewhere within a short period of time. Okay. Someone has asked about the variable cost line. Where should it start? It should start, variable cost line can start from zero because there is no cost. I will show you later. If you do not produce at the level of output zero, what is the variable cost? Zero. Very clear. So therefore, variable cost line starts from zero and it continues at a constant rate together with the volume. Therefore, slope is constant. So you may see the later, if you draw the variable cost line, actually variable cost line is, or cost curve is parallel to total cost. Why? The difference between variable cost and the total cost is the fixed cost. Fixed cost is fixed, fixed amount is added on. In other words, so from here to here, so this is the fixed cost. Start here and this much and draw the line. How are we going to draw lines in a graph, especially linear lines? Remember, the basic principle is there, that is to draw a linear line or in a linear equation, what we call simple line, you need only two coordinates, 2 points, in a way 4 coordinates, but 2 points. If you have two dots, just connect two dots and extend the line as long as you want. That's it. So in the examination, don't worry about the scale and other things. Find out 2 points with respect to any line and draw it. With respect to variable cost, 0, 0, then take 5 units, 5 into that variable cost, 5, 10, whatever. Then mark these 2 points, draw the line. Total cost, again, starts from fixed cost, because at the level of 0, still you got to incur fixed cost. Therefore, that is the starting point. Then take any number of maybe 10 units and have a line and draw. Revenue also start from 0. No product, no revenue. 5 product, 5 into the selling price. Then draw. Automatically you have the graph. You need not to do any calculation. You need not to do a calculation about break even point if you want to draw a break even chart. Don't worry about that. Is the the use of a chart. You draw the chart, automatically find the point where both line cuts. Then you the, the caution is there. If you do not find the break even and draw it, then you scale is necessary. Otherwise, you do not know the point line. So just think of it. Um, in the examination, if you are not worried about the scale, just draw it. Then you calculate break even separately and mark it there. Or if you draw the graph to the correct scale, need not to worry about the break even, that intercept. The two lines, the place where the two lines cut each other is the break even. If you just correspond it to the x-axis, that is the output level, correspond it to the y-axis, it is both revenue and cost. I hope it's clear, right? You must be able to use, actually the use of this graph is not only valid for CVP analysis, it's valid for any types of calculation. Activity 6.8, quickly. Using the information given above, construct a traditional break-even chart. That is the break-even chart. You are required to identify break-even, profit, loss, and all. Just take this information and what lines are required: total cost, total revenue, fixed cost. So fixed cost is given as 600. Then you can draw that line quickly. Just take 1 minute and draw. Then think of revenue. So any any information is there? Yes. Ticket price is 200. Take any level, 1,000, 2,000, draw it. Yeah. And variable cost is 100. Take the same volume and draw it. So it would be very interesting because you learn by yourself with a good understanding. Okay, I'll give you 1 minute. You draw it and see. Then you can compare it with the answer. So Adrian, right, hope that you have drawn the graph. Then I'll show it to you. So, like if you want, you can use the calculation, the break-even value point and all these things, or even without having, as I just told you, on your own, you can draw it. If you draw it on a scale, this is the point, both lines cut, that is the break-even point in units and break-even point in value. Very simple. So fixed cost 600 and total revenue goes like this. Again, it is 1,200 in 1,000, that is 1.2 million, and total cost is this. So the same information is presented there. It is not a big deal. I suppose it's very easy. Yeah, contribution here. Okay, one thing that I just told you, if you are like if you want to learn about graphs, don't think of the break even point and any other things. I'm not talking about the examination point of view. In the examination point of view, you must be able to quickly do it. That's it. So therefore, it is better to calculate the break even point and draw it, because you never go wrong for the examination. But for learning purposes, just draw your own way by taking any 2 points with respect to any line. Okay. So that's what the previous slide, the break even, it is simply the question tells you 600. Actually, that's what you must be able to do, quickly grasp the information. Another weakness I have noticed in students, so grasping power is very slow. Once you read this question, in a matter of few seconds, you must be able to, yes, total fixed cost is 600. This is the amount. That is your challenge. Your company's challenge. You need to recover this entire fixed cost. That is 600,000 by selling tickets. Tickets are sold at 200 rupees. One ticket, 200. But whenever you make a sale of a ticket, you got to incur another additional variable cost. That is the deal. The breakup of these variable costs may not have been given, so that's not given in the question, but it says that 100 rupees has to be incurred as variable. So you make a ticket, maybe printing cost and all those things, and some commissions given per ticket, 100 rupees. So by selling one ticket, you put into your pocket 100 rupees into your pocket. So therefore, that is the contribution from one ticket, meaning of contribution. Therefore, 600,000 divided by 100 rupees gives you 6,000 units. Therefore, you need to sell 6,000 tickets to be break even. If you sell more than that, that's your profit. So you have to give up the idea of having this particular um, show if you can't sell 6,000. So maybe a mega event or whatever. I like it's very so you logically try to understand these things logically. So now it goes to the graph. So here also calculations are there. Don't worry about this, but think of this graph how it goes. And again, as I just told you, we can introduce additional variable cost line as you ask. Just see, here you need to notice the gap between variable cost line and the total cost. It is always constant, what we call parallel lines. The difference between this line at any point in time, if you just draw a line and measure it, that gap is the fixed cost. You can measure the value. For example, here, break-even point, right? Gap between total cost and variable cost. Total cost is 1,200. And line somewhere here. If it has been drawn up to the scale, it should be here, 600. 1,200 minus 600 means 600. You can go to any point here, somewhere there. When you produce 7,000 units, your value is 1,400. Sorry, total cost is, I will take here 8,000. Your total cost is 1,400. Green line, 1,400. So if you come down to um, total variable cost, actually it has not been drawn up to proper scale. That's the reason. It should really cut here, 800. Always the gap between these two should be 600. So it should have gone by passing this point. When you look at here, it should be 800. So in order to understand this graph, I recommend you to take the same information and draw these charts in a scale, or you can make use Excel to do the graphs for you. It does it for you to the proper scale. All the values would be shown accordingly correctly. You can see the things. Now we will move on to the profit chart. In the profit chart, same Accesses are seen, that is the units, that is the volume, and cost and revenue. Instead of drawing this cost line and all those things, we draw only the profit line. So it is easy for us. How do you derive a profit line? By looking at or by using the information given in a question. If you take the same question, we know that the break-even point is this. Break-even point is this. So therefore, we take this point as the point your profit is zero. No profit, no loss means profit is zero. So you have a 0 point and find out another point. You need two coordinates. That would be your total cost, fixed cost, when you do not produce any item, that is your total cost, that is your loss, as seen in this graph. You see illustration. The bottom part of the figure tells you the profit or reveals the profit chart, profit graph. You see at the point corresponding to break even point, this is this curve, is a zero profit. Therefore, your x-axis is your output. When the output is at this level 6,000, this the y-axis show you zero. That means the profit. Since this is a profit chart, we do not show any other things. This y-axis represents profit, x-axis represents output, like in the case of this. So not the total cost. That is the only difference you see. The y-axis represents only the profit, not these costs. That is why it is called a profit chart. Profit versus volume, easy. So therefore, profit is zero when the volume is 6,000. You need to have another point. What is the other point? You go to the zero. When there is no product, the zero, what is when you do not produce anything, you can't have a profit, but still there would be a loss because of the fixed cost you have committed within the given range. Then take the total fixed cost, that is your total loss. This point and this point, and draw the line. Straightforward, very easy. We'll take this example. Using the same information given in activity 6.8, draw a profit chart. Now you can see. You see, 6,000 is the break-even point. Therefore, your profit is zero. But if you do not produce anything, it should be here. It is 600. That is the total fixed cost, because you got to incur it within this range. You are not producing anything, but you go to pay rents, you got to pay that and this. So if employees are hired, you got to pay salaries. Like in the case of COVID, like COVID just forced you to shut down your factory for 1 month. But you may have to pay salaries unless you negotiate, whatever. So salaries would be there. So rent, like maintenance, there would be lots of things. So that is the fixed cost. No profit. That is why some companies are just claiming that they can't survive unless government supports and unless there is a kind of subsidy systems or kind of concessions or whatever. They will not be able to survive for sure. Okay. Now, profit chart and product ranges. In the profit chart, we can, by using a profit chart, we can take some decisions. We can make use that information. How we can improve or reach a particular product range to have a profit. Something like. So simple break-even analysis can be extended to cope with even the now multi-product situation, not only a single product range. Then sometimes, so when we think of a range, I have noticed from students' answers and responses, when we talk about multi-products, you automatically get, there are many products, and situation will be complex. No, it is the most easiest way of calculating. Why? Multi-products or the product ranges are going to be summed into the mix. Mix is fixed, that is single unit. Therefore, calculation would be the same. So I'm not going to explain you, how to do the calculation again, break even point and all these things. You know how to do this. Then in this case, it is much more easier to calculate the average contribution per unit, simply disregarding the product, like disregarding the product mix, in the sense you take into account the product mix and take the total contribution, divide it by the number of units in the mix, calculate the average contribution per product. If you have it, that is much more easy to draw a profit chart for multi-product, rather than making lots of confusion. I have seen lots of confusion in textbooks and different ways of doing that and this, and finally, you do not understand much. Sometimes you understand nothing. And that could be one of the reasons why many students say, oh, this is difficult. I will show you how to draw a profit chart with a product range or multiple product in a second. Okay, take this example. Firm is producing three products, namely X, Y, and Z. It has a fixed cost of 50,000. It has a fixed cost of 50,000. Product X, Y, Z, selling price 150, 40, 60, variable cost. Then you can calculate the contribution automatically. First one 30, second one difference between these two 20, third one Z, difference between these two 25. Perfect. Prepare a profit chart and calculate break-even point if the company is producing in most profitable way. So one information is missing, you better write it down. Even in your manual that may not be there. What is the missing information? We'll assume that this is a mix, like the equal mix, So we sell X, Y, Z, X, Y, Z together, X, Y, Z together. It's not choosing. Okay, you better write it. Okay, now we'll ask you a question. Can you calculate quickly before preparing this thing the average contribution per unit? Quickly, less than a minute. Yeah, I see some answers. Yeah, average contribution per unit. I have 1, 2, 3 answers. It's more likely one could be right. Three cannot, all three cannot be right. Or all three could be wrong. No worries, because what is the rule? I just told you, don't worry about the accuracy of the answer. Worry about whether you engage in the calculation. Yes, everyone, if everyone can do the calculation, that's much better. Yes, yes, very good. It looks like now, so similar answer is getting, it is the answer. It is 25,000. So in thousand, it's 25, right? Very good. That means, so you understood it. That means you have learned it. Then you are through, nothing to worry. So differences are taken 30,000, 20,000, 25,000, add them together. It is 75,000. divided by 3 per unit, 25,000. Perfect. Now tell me, what is your break even? What is your break even point? Assuming that these fixed cost yields also maybe 1,000, 50,000 of 1,000, whatever, just take as it is. Whatever. Yeah, if it is 1,002, okay, you can say that it is actually, there is a little mistake in this question. It should, here you can take as you can ignore 1,000, therefore 50-50, then 50,000 divided by 25, it is 2,000. Or here also you have to assume that this is also in 1,000. Okay, that information has not been cleared in the question, but you understood it, right? Yeah, your calculations are correct. 2,000 or 2 break-even point. So what is the big deal in this CVP? You see, you may laugh at yourself. Oh, how easy it is. Why should we worry unnecessarily of doing that and this, using that formula, this formula? Why don't we read the information and grasp what it is asked and draw a graph and do it? Very easy, right? Then you draw your chart. What is the chart? So when there is no production, your profit is, your loss is 50,000. When you, excuse me, can I answer this call? 1 minute. Huh? Do we have to ignore 1,000 in sales? So that is 1,000 in sales when we are calculating. Yes, yeah, you better ignore it, because that error has not been corrected. If it is an examination question, of course everything would be given perfectly. Even in examination, if there is an error, don't worry, just do it. So here you do the calculation as at your convenience. Again, like, okay, you ask the question about this average calculation of contribution and the product mix. In this question, the missing information is we maintain the equal mix. That means the bundle, when you sell XYZ, all the time 3 units are sold together. So otherwise product range may not arise, or multi-product CV, the profit chart cannot be drawn. Okay, product XYZ, that means at a time we sell 1 unit of X, 1 unit of Y, 1 unit of Z. That's how. So therefore, that is the bundle. Therefore, in a bundle 3 units, what is the average contribution? Average contribution per unit for the 3 units, if you take this thing as a bundle, like in the previous example, with the 4 units, here 3 units, your total contribution is difference between 150, 20. So you added 75. If you go alone with 75, that is for 3 products. Therefore, if you divide 50 by 75, you would get the break even for, I mean, in bundle 3. It has to be multiplied by 3 in order to get it. So therefore, answer is 2 divided by 3. So that would be the answer. So that is why I told you. So someone asked the question, importance of calculating the average contribution, because at the end of the day, finally what we want is not the number of bundles, or what are the number of units to be produced with respect to each product. Then we know that 3 products are there, total contribution from 3 products 75 on average divided by 3 on average. It does not mean that each product will, because whenever you make a sale of 3 all the time, because you got to do it, That is your sales mix. 1x, 1 Z, 1y. Then automatically you end up with 75. What is the average? Average is 25. So think of this per capita GDP. It does not mean that all product X, Y, Z gives you 25 each, right? X gives you 30, Y gives you 20, Z gives you 25, altogether 75. But more or less, they are close to your average. Unlike in the case of GDP per capita, this example is much more better because your average is 25. Whereas Z also gives exactly 25. Good. Y gives you 20, much more closer. Z gives you, X gives you 30. Good. You got it? No, 2000 is not the number of bundles. 2000 is the number of units because you got the unit contribution, average unit contribution. Number of bundles, that has to be divided by 3 because in a bundle there are 3. Because in the profit chart, if you want, you can rename the quantity x axis as bundle, but the question asks the total units or total value. In this case, actually, we can determine the total revenue with respect to the. So if you want, you can have the number of bundles. Then the value, always it has to be multiplied by total selling price 150, 190, and 250. Okay, right. So now we will move on to show this in a graph. I will explain further with the graph. So first do this calculation. XYZ average is 25 and the break-even units 2000. Therefore, break-even sales means 166.666 sales in thousands. That is 166,667. How do you get it? Fixed cost, that is 50,000 divided by CS ratio. What is the CS ratio? CS ratio is average contribution is 25. 25 divided by total selling price. So that is, just take it down. I'll just show it to you. I think I did this calculation. Break even sales. You can multiply it by the average selling price. 1 minute. So did I do it? I did the calculation somewhere. 1 minute. Okay, this one here. Okay, you can see the calculation here. I'll show you this in the Excel, that is easy for you to understand. Yeah, you see, break even, sales, CS ratio is, I'm sorry, yeah, 30%. So that is, how do you get it? 75 divided by 250. You can see the screen, right? 75 is the contribution divided by 250. CS ratio is 30%. So therefore, break-even point comes fixed cost, that is 50,000 divided by 0.3. It is 166,000. So I think it is clear. Yeah, price, it is 250 divided by, no, 3. 1 minute, 167. Is it 250 divided? How can we divide? One minute. Question. Break even point. Yeah, so you can calculate either way. Okay, so here, if you take 25 as the average contribution, average selling price, yes, of course, 250 divided by 3. Then it would be like this. It is 30%. You can see this Excel calculation. You can do either way. You can do either way, right? Here, what is asked is you need to calculate the break-even units and the value, right? Break-even unit and the value. So here it gives you the 2000 is the total number of products. Total number of products. Why? How did you get it? 2000 again. I'll just show you. 50,000 divided by 25. Therefore, 2000. That is not the number of bundles. Unit contribution per unit average. Units. So from each unit, this has to be divided by 3. Is something like, so you can do this reconciliation all the time. It should tally. If there is any difference, discrepancy, that means something wrong with the calculation. Okay, here our target is, since we want to draw a chart, need not to worry that much. Once you have this total number of units on one hand, how that the revenue is going to be distributed among X, Y, I, Z can be done separately. And on the other hand, what we need, the total sales value. How do we get it? Whenever you have the break-even point or the fixed cost divided by CS ratio, or the break-even should be multiplied by the selling price. But here, individual selling price. If that is the case, so you can do different ways of doing calculation. Divide it by 3. So this is the number of bundles, right? If you multiply the number of bundles at the total selling price of 250, you get the same answer, you see? Because calculation can't go wrong as long as you follow the basic principle. So the CS ratio also can be calculated in 2 ways. One is take the total contribution for the bundle of 3 divided by the total selling price, that is 250. Or you go to the contribution from 1 unit, that is the average 25, average contribution divided by average sales. Average contribution is 25. Average selling price is this much. Actually, so they are not accounting concepts or mathematical concept. So it can't go wrong. Okay. So therefore the break-even sales is 166. So that 1 minute. We will move on to the chart now. So this is how it is drawn. Therefore, you better not to make it very complex. Straight away, follow the simple rule. What is the simple rule? You did the calculation for break-even sales. That is, sorry, here profit. Sorry, we made a mistake. Yeah, 166. So this is the number of bundles, right? Number of bundles, 166.67. 100, sorry, number of bundles. You see, number of bundles in the sales value 166,066. So forget about it. We are worried about the profit and the units. I think there is a confusion. 2,166 break even point 167. Let me check it. 150, 167, 66. Profit graph. That is 0, break even. Okay, that's correct. So 167 is the yes, you are right. We so one question is asked here. We produce 666 unit from each set X, Y, and Z. Yes, you are right. And the break even sales value. Okay, break even sales value is this much. Here in your volume, remember that what we have taken is not the units but the sales value. So if you want, you can modify like this is the volume. Remember, volume could be units or sales. Here the volume line has been taken as the sales volume. When the sales volume is 166.7, so that this is the break-even sales. We have done the calculation. If we wanted, we could have name these thing as number of units. 1, 2, 3, likewise 1,000, 2,000. So therefore here exactly in units 2,000 is the place where it cuts. So here is the sales value. So you can in your manual or in your, if you have taken a printout of this presentation, you put the stroke, the backslash, and write down quantity, units, or volume. Here volume. Okay. So again, you ask how we got the sales value 100. So sales value was taken like this basic principle. What is it? Break even sales value is fixed cost divided by CS ratio. Fixed cost is 50,000. Fixed cost is 50,000 divided by the CS ratio, that is 30. How do you get the CS ratio? Either by dividing 75, that is the total contribution, by 250, or average contribution of 25 divided by average selling price, so 250 divided by 3. Mathematically it is correct, therefore 3. So all the time CS ratio, no matter whether you use the aggregate number of total or individual value, it should be the same. As long as you have the CS ratio and you have the fixed cost divided by CS ratio gives you the break-even sales. So therefore 166,666 is the break-even sales. So here in your volume line shows the sales volume and not the quantity, So when the sales volume become 166.6 in terms of 1,000, your profit is 0. When your sales volume is 0, you end up with a loss. Then you have 2 points, this point and this point. Simply draw this line in the scale. This is what we call, this green line is called the profit graph when there is a multi-product. Now, the second part, that is the explanation. So here, that's what, so someone again asked a question, what does this x-axis show us? I just told you, it could be the volume. So it's the volume. Volume can be either number of units or sales volume. Here, for the example given in your manual, volume means the revenue has been taken, not the number of units. You can do the calculation with the number of units and do the reconciliation at home and reconcile. It should tally exactly. You should have the same answers, no worries. But we here have taken the same graph because the same example has been given in your manual with the sales volume, not the units. Right. Now the second explanation is needed. What is the second explanation? When you, like, as someone asked, if you look at this situation, 166.7 something, of course, each unit X, Y, Z are being produced at 600,666 something. Then you can reconcile it 6666 something multiplied by its respective selling price 250, 100 something, like whatever the selling price given, it should be equivalent to 167. So that is a reconciliation. You can do it later. But the emphasis, like more additional explanation, can be given with the this yellow or maroon line. What is that? This line is the representation of each product if they are manufactured in full situation. In the example, it tells us that yeah, there is no limitation of the number of units, right? Are there any limitation? No, no number of limitation. So therefore, we have taken up to a level of 250. When you manufacture these units, fifty thousand, yes. Assuming that, is there any limit is given? No, 1,000. No, it has not been given. But we can explain it here. Yeah, yellow line. I'm going to explain you the yellow line. Yellow line explains you how each item, right? When we take the total sales value, each item contributes to your revenue. For example, go to the start point. That means no item is produced. No item is produced. That means you end up with a loss of 50,000. Assume that if you produce any item, here we have taken here, you can mark total revenue of 50,000. Let's go to the Excel sheet and check. Yeah, sales. If you take Y first, because Y gives you the highest contribution, but so there's no hard and fast rule you can think of, but explanation is here given on the assumption that we first produce, like, oh, don't need not to think that we first produce Y. If you produce Y, this line gives you the total revenue. How much is the total revenue? It is 40 if you produce Y. But if you produce Y only, what is the contribution coming from Y? Sales contribution is 20. If you produce only Y, total sales is 40,000, contribution is 20. So your total fixed cost is 50. So therefore, when you produce Y, you will be able to recover only 20,000. Still, you end up with a loss of 30,000. That is why this particular dot tells you, in a situation, if you consider, okay, the contribution from product Y, still you are in a loss situation. But if you go to the second situation, this graph, Z, if you produce Z, what happens? your revenue will go up to from this level to somewhere here. This is, it would be 100,000. So I'll just check it here in the Excel. Yes, sales from Y40, sales from, we said 60, all together, it goes up to 100. So look at this particular point, right? If you extend the line, correspond this line up to the x-axis, it is 100,000, meaning your total sales is 100,000. But still, when you have a total sales of 100,000, what is your situation? As far as the company is concerned, from product Y, you get a contribution of 20. You can see it here. From product Z, you get a contribution of 25. Altogether, total contribution is 45. But the question tells you that, hey, your total fixed cost is 50. So that is why your the yellow line tells you that still you are in a disadvantage position. You are not in a break even, meaning if the company disregard the product mix and produce only Z and Y and Z, still company ends up with a loss. But what would happen? The third point tells you the situation when the company produces all three products in the same mixture with the given volume. This is the sales volume has been given. So therefore, total sales volume comes to this 100 plus 150, 250. Therefore, your value line goes up to 250. So your volume therefore is 250. So when you are at this particular point in time, of course, you have a profit. That is your profit. Your profit would be somewhere here. It is 25,000. How do you reconcile it? You can check your total contribution is therefore 75. This is 30. Altogether 30, 20, 25, it becomes 75, 50, 75. Total contribution is 75. In a situation where there is a total contribution of 75, so and the total fixed cost of 50, of course your profit is 25. So therefore, if you are here, you end up with a profit. But the break even point is somewhere here. So in a multiple product situation, you should not confuse with this yellow line. Yellow line is just explanation how each item has added to the total contribution. That's it. Actual, the meaningful line is the green line. Green line tells you at each point in time, at each volume of profit, what's your situation. If your volume of 166,000 sales with this particular product mix, you don't have a profit, zero. If your sales volume is less than 166,000, of course you end up with losses. If your sales volume is greater than 166,000, then you end up with a profit. So you decide, you choose it. Okay, so that is the way you have to understand this graph. Question? No, not necessarily. So one asks the question whether it is compulsory to draw this particular line. Not necessarily. This is for the learning points. If it is compulsory, it has to be written in the question, saying that draw a line to show how each product contributes to the profit. Because the profit line is this. Just think of the basic principle. In a graph, we assume that we follow the basic principle of the linearity. So therefore, this is the line. Does this line follow the linearity? No. Therefore, it has no meaning. No meaning. Because in a simple equation, this line does not follow this line. But if you want, you can interpret. Yes, there are three linear lines. From here to here, one line. From here to here, one line. From here to here, one line. So that is the linearity. And not the entire line from this point to this point. It is not a linear line. It explains you from here to here. This slope explains you the profit or the contribution added by one product, contribution added by the second product, contribution added by the other. So this is additional point for us to learn, and it is not a part and parcel of or compulsory part of the profit line. I hope it is clear. Yeah, in the examination, we do not know. There is a possibility of asking. If that is the case, you have to do that. But master of getting the average or contribution and drawing the first line, that is the when there is a multiple product line. Yes. Okay, you asked the same question. So that's the target. So quickly we will move on to discuss the rest of the things. Now we will look at the marginal costing and management accounting decisions for CVP analysis with a short run question. So again, I emphasize in this short term decision making within a given relevant range, logical argument is whether we can recover our variable costs. If yes, financially it is worthwhile. If not, financially it is not worthwhile. Again, I emphasize in all the short run decisions, short run refers to a relevant range, a day, a week, month, 2 months, quarter, 6 months, 1 year. It could be any, it can't be 5 years, 6 or 10 years, but it could be an operating cycle sometimes. I just refer in general, 1 day, 2 day, week, month, or 1 year. But if your operating cycle is more than 1 year, yes, of course, your short run, your relevant range is more than 1 year. For example, in the case of uh, airplane, aeroplane manufacturing, it takes, assume that 1.5 years or 2 years. Therefore, your relevant range is 2 years. Within 2 years, how many aircrafts are? So you need to think of these practical situations as well. But it's a very exceptional case. That is why we do not take exceptional cases to explain general situation. Okay, I'll summarize it again. We talk about a relevant range, that's a short run. In a short run, first we need to ask a question whether it is financially viable or not. Any decision, production, selling, buying outside, outsourcing, or scrapping a production line. So any sort of decision within a short term, rule of thumb is this: whether we can recover the variable cost. If yes, it is financially viable. If not, financially not viable. Now you should ask a question: if it is financially viable, should we take that decision or not? Not always, because financially viable decision may not be strategically significant, strategically viable. If financially viable thing strategically may be harmful, profit may be there, but the long run you may face problem. So mind it that. So therefore, before taking the final decision, you need to ask the question: if it is not financially viable, then you should not go. By the same way, you should ask a question: financially not viable because you can't recover the variable cost. Then what is the decision? Obvious decision is yes, you should not go ahead with. But strategically, sometimes you may have to run these things even at a loss. Because in the long run, this connects to long run decision and might create problems. So therefore, final decision, so simple lesson is final decision does not depend on the financial viability. In the short run decision, you have two targets for the examination to determine the financial viability. How do you do this? Check the variable cost. That's it. Decision depends on other qualitative information. With this narration, explanation, we'll go ahead. So take this example. Company is producing 4 products and planning its production mix for the next period. Estimated costs, sales, production data are given below. Okay, 4 products. W, Z, Y, sorry, W, X, Y, Z. Selling price is given. Labor cost is given. Material cost is given. Minimum demand is given. Right? This is what we call, we are going to deal with a situation of limiting factor. Limiting factor. Based on the above data, what is the most appropriate mix if labor hours are limited to 50,000 and materials are limited to 110,000 kilograms? We'll take one by one, labor and material. Before doing that, can you quickly work it out and tell me the contribution from each product quickly? WZY, WXZY. Contribution from each product. Mentally, you can calculate. 1 minute. Question. Okay. Yeah, some answers are there. Good. We'll check. It looks like yeah, answers are correct. Mm, so selling price is there. Labor cost, of course, 6,6. So this at these two, labor material, that's it. So there is no any other cost. So simple deduction of these total from it. Then the question arises. So which one gives you the highest in your answers? Also, it looks like Y gives the highest. Y gives the highest. We'll check whether it is true. Okay. Huh? I'm sorry, I have not. Okay. Yeah. I think that is there in the Excel sheet. Multi-product situation, mixed. Show you the calculations. Where I did it. I just did this calculation. 1 minute. Yeah, this is the. No, this is XYZ. That is W something, right? Hmm. I have forgotten to take this into the. Yes, it is here. That is why I was just wondering where I just did the calculation. Now you can see. So your calculations are correct. Contribution. So Y gives the highest. Then we'll mark it. Then any decision, if you do not know extra information, we may tend, so that is very rational, to give the priority for Y. So produce Y as much as possible. But the question asks, your labor hours are limited to 50,000. If labor hours are limited to 50,000, you need to do a recalculation or recalculation. What is that recalculation? Recalculation is calculate the contribution per labor hour, not per product, because that is going to be what we call limiting factor. This factor limits our operation. So therefore, limiting factor has to be utilized maximum way to increase the profit. How do? We divide the contribution per unit by its labor requirement. So if you look at the labor, 2 rupees or whatever dollar per hour. So how many hours are used? Then you have to calculate. Labor, sorry, this is ranking and production mode. Labor requirement W, okay, W XYZ like this. Here there are three, so value is 3, 1 unit is 2, therefore 6 divided by 2, it is 3. It is clear. So likewise, this is 2, this is 7, this is 5. Now what you are supposed to do is to calculate contribution per labor hour, contribution per labor hour. How do we do it? Here you have 16, I'll take 1, 16 divided by 7. This is one example, otherwise we'll take 18, 8. This is the contribution from X divided by labor requirement, that is 2. Labor requirement is 2. 8 divided by 2, answer is 4. So therefore, this line gives you the total contribution per labor hour. That means when you use a labor hour for product X, it gives you a contribution of 4. Contribution is our profit finally. Contribution that drives the profit because it already fixed, your variable cost has been recovered. Then Z gives 2.8. You can rank. This is rank in number 1. This is rank in number 2. And next rank in number 3. Lastly, you should produce this one. So therefore, do the calculation. So if you start the production based on labor hours, ranking goes for 1, that is XY. Labor requirement per product is 7. And into, sorry, right, this is the, yeah, 3, D3, yeah, 1 minute. D3, that is labor hours, the cost, that is 14, 14 divided by 2, labor hours 7. Here labor requirement is 2, labor requirement is 3. So you have all. Then go for the maximum production from each, 5,000, 5,000, 5,000. Ranking number 1, 5,000 production requirement is this. Ranking number 2, this one, 5,000 requirement is this. And ranking number 3, it is this. And ranking number 4 like this. But here, so when it comes to labor, even though that is the limiting factor, so you can produce all the products W, X, Y, Z, the maximum capacity, that is 5,000 each. Whenever you use 5,000 each, your total labor, still you would have used only 110,000 according to my calculation. If I'm not sure whether I've gone wrong, because there are some questions, we'll see. No, unit contribution X and Y different, right? You see, labor contribution per unit, highest is the X, therefore it is ranking number 1. And this is the second one, 2.8, number 2. So this is 2.6, therefore it is 3. This is 2.29. It is not the same because you don't see the same contribution. So here contributions are different per labor hour. So likewise, we can do the calculation for 1 kilogram, contribution per 1 kilogram of material. Here also different. Highest is this, Y. Therefore, you need to give the priority for this. Second one is this one, 1.16. third one is this, and the fourth one is this. So ranking would be slightly different. In the case of raw material, 1, 2, 3, 4. In the case of labor, 1, 2, 3, 4. So this 1 becomes 4 in the case of labor. So it is not um, giving that means not highly labor intensive, lots of labor is being used, less productive. That's the reason. Okay. So that is how you need to get the answer. Then after that, allocate the total hours for the maximum limit. Okay. The time is, so I need to little bit expedite. Okay. Then, so that is how you should allocate. Now I will quickly move on to special order, acceptance or rejection of a special order. Take this example quickly. 6.13 says X Limited manufactures and sells drink, a particular drink, which they sell at. So one question is 1 minute. Is the recording run or not? Yeah, recording is been done. So yeah, so you would be able to get it later. Okay. Sells at 20 per bottle. That is the selling price. Current output is 400,000 bottles per unit. What is the relevant range? Month, which represents 80% of the capacity. 80% of the capacity. If you want, now you have to mentally calculate. If you divide 400,000 by 80%, it gives you full capacity. Full capacity is much more higher. They have the opportunity to utilize their surplus capacity. What is the surplus capacity? You can quickly calculate it. 400 divided by 8. So how much is it? 400 divided by 0.8. It's 500. Therefore, additional 100,000 bottles can be manufactured if you want. Okay, good. Yes, 500. Therefore, additional capacity is 100,000. By selling the drink at no, they have the opportunity to utilize this excess capacity, the 100,000 capacity, by selling the drink at a price of 13. Now, in the market, normal market, you sell at 20, 400 bottles, that's your maximum. But for a special order, you can manufacture additional 100,000, but you have to sell at 13 to a supermarket, which will sell at its own label. Supermarket will stick their own label and sell it at whatever the price they like. But you get only 13. The total cost for the last month was 5.6 million, of which 1.6 million were fixed. So therefore, if you take the fixed cost out, 1.6, 4 million is the variable cost. Variable cost. You got it? Total cost for the last month is 5.6 million, out of which 1.6 is the fixed. Once you take the fix out, variable cost is 4 million. Okay, can you quickly calculate the variable cost per unit? Quickly, few seconds. So that is the decision rule, or the drive that the one that drives the decision. What is the variable cost per unit? Okay, very, if you can do the, very good. How do you get it? So here 4 million, actually need not to have even calculators. 4 million mental calculation. You see? Yes, all the answers are correct. 4 million divided by 400,000 bottle. Therefore, it is 10. So to produce 1 unit, you incur 10. Therefore, your contribution margin is also 10, 50%. That's something. But with respect to this special order, you incur 10 to manufacture it. You have an opportunity of selling at 13. Is it financially viable? That is the question number 1 I ask. Yes, you have an excess capacity and you can use it at a cost of 10 and you can generate 13 by giving you a net profit or gain of 3. 3 into 100,000, 300,000 profit can be easily made. So therefore it is financially viable. Just see, even a big question can be solved in few seconds. But that is not the answer. That is financially viable. But should you go ahead with this? Actually, it depends. It depends. So you need to say lots of things about this. Though this is financially viable, we do not know if you sell this product, this supermarket will slowly eat into your market share in future. They may sell at a lower price, then the consumers may not buy from you. So you will not be able to sell 400,000 bottles in future. It would go down to 200. Then the supermarket will pressure on you and so many things on one hand. So negative side. The positive side, sometimes you can say, yes, we can go ahead, that is financially viable, even we can make use other idle employees, and so that would be really good for us, and we can utilize this excess profit to expand our business. So likewise, you can argue from both sides positively and negatively and say, so with the given situation you can say, by considering these qualitative factors, if the qualitative factors are not going to negatively harm from financial point of view, it is better to take this decision. That's the answer. Okay. um, should we use 320,000 units in this case, calculating the average variable cost? No, this is a current output is 400. So someone asked, current output is 400,000, which represent 80% of the capacity, right? So if you take 80% of this thing, 320, so that is something else. So that is a wrong interpretation of the input. So if it says that the your normal capacity is 400,000 and you operate at 80%, then your answer is correct. Someone asked, why don't we take 320,000 as the current capacity? No. Current level, it says current output level is 400,000. That represents 80%. Therefore, your 100% is 500,000. Okay. I hope you got it. No worries. Is that clear? Very simple question. So if you try to understand a question in that way, that is much better, convenient, and it would be really interesting for you to learn. Now, another question. Dropping a company or producing a range. This example, 6.14. Quickly, tell me whether this decision, the total fixed cost of the firm is 36,000. Total fixed cost, company produces XYZ, 3 products. Total fixed cost is 36,000. You go to recover it from the contribution. 1/3 of the total the cost of each product represent the fixed cost. For example, if you look at take the case of X, total cost 36,000 can be divided into 12,000 as fixed, 24 as variable. Here 39,000 can be divided into 3, that is 13. 13,000 is fixed and 26,000 is variable. Here 11,000 is fixed, 22,000 is variable. The marketing manager of the company argues that the product X is making losses. Of course, that is final loss. Sales is less than the total cost by 6,000, sorry, 4,000. As a result, you have a loss. And should it be discontinued? Should we stop it? Managing director of the organization seeks your advice. So before giving the advice, so you should not be hurried to give the advice. What it happens? So financially, if you drop X, what would be the financial impact? Quickly calculate. Would you be able to stop this loss, or would it further aggravate the situation, or would it be able to, if you can lose it, I mean avoid this loss, your profit will go up by 4. If you will not be able to do that, so something else. Just quickly calculate in less than a minute. Very good. Now you guys do the calculations very fast. No, okay. One calculation came, others only. Yes. Okay. Mm-hmm. Yeah, someone has said it reduces the loss. It reduces the loss further by 8,000 and 11,000 profit, something like. Mhm. The second answer, like answer is there. I did not get what is meant by. But the first answer, it says that it reduces the loss further by 8,000. It should not stop as excess contribution. There are 8,000 more than fixed cost. Okay, good. Total profit will be 11,000. Then yeah, that so someone says total profit will be 11,000. What does it mean then? I mean, decision like connection to this thing, will it increase or decrease? Because now we are going to take a decision. Then what we need is not the total values of anything. So what would be the impact? Even in the case of total profit, if you take a decision to scrap this product, whether total profit will go down or increase. That is, have to continue because it helps to cover 8,000. Decrease the total profit by further 12,000 something. Okay, good. So since the time does not permit, I'll jump on to the question, the answer. Okay, before showing you the answer, so you can do a mental calculation here. If you stop this, of course, if you stop this, of course, 1 minute, another answer has come. Yes. Okay, that's the same answer. If you stop this, of course, there is no loss. Loss can be reduced, apparently, from X. Loss from X can be reduced. That is the argument. That is how you should go ahead with the calculation. Loss from X can be reduced, but the fixed cost, which has been already absorbed by X, that is 12,000, will have to be absorbed by other two. So you are reducing 4,000 by stopping this sale, but on the other hand, you have to additionally absorb 12,000, which had been absorbed already to product X between Z and Y. So cost of X and Y, sorry, Z and Y will go up because they are the only two products. Absorption costing, right? So this 12,000 will be absorbed no matter what proportion. Forget about the cost of both Y and Z will go up by 12. Whereas you save 4 here. Difference between you save 4,000, you incur 8,000. Financially, need not to do any calculation first. Do that and say that financially it's not viable. This decision will earn or save 4,000 on one hand, but on the other hand, increase the total cost by 12. So difference is simply 8,000. So if you take a decision to scrap product X, of course, your loss will go up, profit will go down by 8,000. That is the situation. Either cost will go up by 8 or profit will go, finally profit will go down. Therefore, the decision is not financially viable. Should we go ahead with that decision or not? It really depends. Don't know. From financial point of view, only you should not go ahead with this. If you consider other things, yes, you can come out with so many reasons, 101 reasons. This product may be outdated one, so we can make use these employees and the facility to develop another product, another hybrid one with new technology. We can if those possibilities are there, it's okay. If this product X is also already in the say decline stage, we don't have any survival in future. So likewise, so you can say. So one question is, yes, if produce X, loss will not produce, but yes, the same thing. Yeah, okay. Um, so that's the thing. So again, I clear it. Of course, decision to drop X will save 4,000, but increases the cost of Y and Z by 12. Whereas total net impact to the profit of the company from a holistic point of view, profit of the company will go down by 8. That is not financially advisable, viable. But final depends has to be, I mean, the decision has to be taken by considering other factors. So I think, yeah, this is the answer. So to the profit, before the decision, total profit was 19,000. After the decision, it would be 11,000. So therefore, so if you are asked to calculate the total profit, if you scrap this is the answer. But if you are asked to um, say whether you should scrap the product or not, if you give an answer of 11,000 or 19,000, that is not the answer, because just telling 11,000, it doesn't tell you anything. But if you compare, previous situation is 19, now 11,000, with by dropping this, what will happen? My goodness, then your profit goes down by 8,000. Very black and white answer, very clear answer is there. From financial point of view, we should not do that. Then quickly, last question. I think you have a lecture. So quickly, so take this. Ask the company, 200 could be bought at 775. If so, the the capacity utilized at present would be unused. Right? So if you do not accept it, so this is unused. So as a result, 60% of the fixed cost, okay, that would not be unused. If you are not going to use, then as a result, 60% of the fixed cost could be saved. Decide whether LXL 200 to be manufactured or produced. So quickly look at from the financial point of view, right? Firm manufactures this one at the cost of production is like this 50,000 level, right? The current level of 50,000 as follows. Um, that is the current level, and 60% of the fixed cost can be saved. If you are not going to produce here, current that the 50,000, so you are going to fully buy it from the outside without producing, but you can save 60% of the fixed cost. Financially, check whether it is viable or not quickly. How are you going to check it? You check costs and benefit. What are the benefits? Benefits, if you stop this and go for the manufacturing, you can save 60% of the fixed cost. Calculate the 60% of the fixed cost mentally. I'll give you 1 minute. And what is the benefit? Sorry, that is benefit. What is the cost? Cost would be the amount that you are going to pay, 7.75. But that is the full cost. But you are saving because your variable cost is 250, 125, 175. So these are your variable costs. So this is the new variable cost. What would be the incremental variable cost? That is your incremental variable cost. Then that cost can be compared with the cost savings and check whether it is worth. Quickly, first do the two calculation. One is total cost savings, total incremental cost. Do calculation mentally, quickly. Yeah, yes, calculations have come. Okay, good, good. It looks like incremental cost will be this much. Yes, very good. Now, if you have done this calculation quickly, mentally, or maybe using calculate without having any big complication, actually, you are really good. So you are on the right direction now. You know how to take decisions, short-term decisions. So only few answers were there, but if others follow the same pattern, so those who have done the calculations, don't worry. So you are through. So you are on the right direction. So quickly, what do you have to do? What is the save? So savings? 60% of the fixed cost. So how do you calculate the fixed cost? Look at the fixed cost overhead. So this is the absorption, 350 per unit. This is not really something that is being incurred per unit. It is an absorption. Absorption is done based on the volume. Therefore, 350 should be multiplied by the current volume, that is 50,000. 350 into 50,000, how much is it? 100,000 means 350 divided by 52, that is 175,000. So the current level of fixed cost absorbed to this product is 175,000. But you can't save entire amount. You can save only 60%. So 60% of 175,000 is, so 10, 17,500, 35 into 3, 105. So 105,000 can be saved. That is your benefit. Keep it in one hand and look at the incremental variable cost. So current variable cost is 250, 125, 175, 3, 550, 550. Whereas you are going to buy at 775. So you are going to incur 775, whereas you are going to save 550. Difference between 550 and 775 is how much? 550, 775, 750, 225. 2 rupees and 25 cents can be saved. So sorry, not saved. So 2 rupees and 25 will be additionally incurred. For how many units? Your current level is 50,000. It has nothing to do with the 60%. So don't get it confused, right? Don't get it mess up with that. So your current level of production is 50,000. You got to sell 50 to make the sales of 50,000 units. So 50,000 into 225 means 225,000 divided by 2, 112,500. So you incur more than what you save. You are going to incrementally incur 112,500. You are going to save only 105,000. Difference is 7,500. So most of you guys had, I'm not, so all those who all have given the answer um, um, correct. So someone has, so I'll just answer this question later. And therefore, it is not advisable because you are going to lose 7,500. But if this 7,500 is not material and other qualitative factors would warrant something else in future decision. So again, I emphasize decisions are different from the financial viability. So someone has asked a question, how do you get this 550? 550 is the variable cost. So where raw material 250, labor 125, variable overhead 175. When you add all these three, it comes to 550. If you are not going to manufacture, of course, you are not incurring this 550. But you are going to simply buy from outside. Then you incur 775 per unit. That is your cost. That is the price that you pay. Whenever you pay 775 per unit, you save 550 from here. Therefore, your additional cost is 775 minus 550, that is 225. 225 into 50,000 is the additional cost. So if you can master and increase the improve your calculation in that way, that is much better. So therefore, variable cost is 5, offer price is 775, cost saving is this much. Cost saving in fixed cost is, so this is not cost saving. This has to be, so in-house product, like additional cost. So there is a mistake here. So you better write down in your, if you have a printout, incremental cost, right? So outsourcing 112, cost savings is 350 into 50,000, 150, 60%, 105. So difference is 7,500. So that's the answer. Therefore, you should not go ahead with this decision. So change this to be. Now, if you have any question, please ask. Now time is 11 sharp 11. So I just wanted to finish it a bit early, but could not. So you can post any question if you have. Just if I summarize again. So in CVP analysis, CVP analysis is rather simple lesson. Think of only three variable: cost, volume, profit. Cost is just defined as I just explained you this way. Volume is defined that way. Profit is defined this way. So decisions we need to take at what level of our volume we are okay. That means whether we can go ahead with our operations or not. So critical point is the break-even point. Why break-even point tells you you are in the middle. So no profit, no loss situation, but that is risky. Why? If your operation goes down below the break-even level, so you incur losses. So therefore, always better to be the other side, the something more than the break even. If you can operate at a level which is greater than the break even level, so that is you are in a safe zone. So that particular margin is called margin of safety because you are safe. That margin of safety can be expressed as a percentage of the total sales, or maybe in the number of units, total sales value, or anything, but it has to be specified what it is, maybe as a profit. The margin of safety is this much profit. So there is no hard and fast rule, you can express it. Then we come to multi-product situation where we make assumption that we maintain the same product mix. Then we can calculate the average contribution. By using the average contribution, you can calculate the total number of products to be break even. Then this break total number has to be divided among the product mix in accordance with the total product mix. Then the same information can be represented in graphs. So graphs follows the basic rules of simple equation linearity. Then the same information is presented. Therefore, by looking at a graph, you can take decision and you can say lots of things about your performance, including multi-product situation. Finally, short-term decisions are also there with respect to buy or scrap a product line, outsource. So many things are there. Rule of thumb, as I told you, step number one is to determine whether it is financially feasible. Financial feasibility in short-term or CVP analysis is measured in terms of net cost saving. Net cost saving deals with the marginal cost, variable costing. Or if the variable costing, marginal costing, or the costs are less than the benefits, then financially viable, not otherwise. Even if it is financially viable, final decision depends on the qualitative factors. You need to consider or take into account them before taking the final decision. So that is the summary of this thing, and some few questions I've asked. Yeah, so answer is shown. So for the last question, so 6.12, right? You're referring to the previous one or what? 6.12. Yes, someone is asking a question about 6.12. Yeah, what is the question? So 6.12. Sorry. Someone has asked like labor hours 50,000. Yes, you are right. So sorry. In the case of labor hours, 50,000. So therefore, you need to limit it. So then my calculation is wrong. 6 point with we can't allocate labor hours for product wise. Okay, so you're right. So total is 50,000. Therefore, labor hour calculation. First one is, what is the ranking? Labor hour ranking is this one. Product X is number one. Then we produce this one 5,000, 10, and second one 25. Then third one. So if you the fourth ranking is this one. If you delete it, how much? Yes, actually we cannot produce Y because 50,000 is the total hours. Because I have done a mistake, because when I worked out the labor calculation, I have taken the raw materials. That is the reason. So you are right. So number one, you produce 5,000 from X, then 5,000 from Y, Z, 5,000 from W, no products from um, Y. You are right. For material, um, I did not work it out. So you better work it out and see the same rule is followed. So finally, it should be limited to 110,000. If the total material requirement is required for more than 110,000 when you produce 5,000 each, you need to stop. So most probably product X may not be produced, or little amount of product X may be produced. I didn't work it out. No, two. Okay, another good question is asked, has been asked. Can we take two limiting factors together? Cannot. Why? In a linear situation, only the degree of like the freedom, but we have to deal with only one variable. Unless you combine the impact of two in such a proportion, if that's the case, that has to be given. Normally in your examination, both are not combined. So, but you can go to a situation like this. First, we face this constraint, then the other one, not together, not simultaneously, but one follows the other. That's possible. One follows the other, not together. Okay. So those questions imply that you have understood so the concepts. Hope so. All the best for you guys. So with that, we will stop the lecture and go through these presentations. So if you have time again, you can listen. So and you are free to ask questions. You can drop your question in LMS, or you can personally ask, or maybe send emails even to me, and you discuss yourself always with a critical mindset, asking a question: why? Don't believe in anything. Just grasp information, collect information as much as possible, relevant information. Do the processing by yourself, and always management accounting, so which deals with information, so it would help you to read answers quickly, and so that's what you are supposed to do. Thank you very much. With that, we will stop, and there is last question. Okay. So thank you so much. So see you again. All the best.